Warren Buffett's path to wealth, how he became the world's smartest investor. Warren Buffett, often called the Oracle of Omaha, is considered one of the most successful investors in the world. Starting with little more than a passion for numbers and business, Buffett turned his early investments into a fortune that has made him a household name. Today, he's the chairman and CEO of Berkshire Hathaway, a conglomerate worth hundreds of billions of dollars. But how did this simple small-town boy build such incredible wealth? In this video, we'll take a closer look at Warren Buffett's journey to success and explore the strategies that helped him become the world's smartest investor. Stay with us until the end, because there's a valuable bonus tip waiting for you that can help you think about investing in a whole new way. 10. Early beginnings, a love for numbers. Warren Buffett's path to wealth began long before he became a well-known investor. As a child, he always had an affinity for numbers and business. At just 6 years old, he started selling chewing gum and Coca-Cola door to door in his neighborhood. Even as a young boy, he demonstrated a natural entrepreneurial spirit. By age 11, Buffett was already investing in stocks. He bought his first stock, Citi's Service Preferred, at the age of 11 for $38 per share. When the stock dropped to $27, Buffett sold it, thinking he'd made a mistake. However, the stock later skyrocketed back up to $40. This experience would teach him one of the most important lessons of his life. Patience is key when it comes to investing. 9. The influence of Benjamin Graham. Buffett's formal education in investing began when he attended the University of Nebraska, where he earned a degree in economics. But his journey truly took shape when he attended Columbia Business School, where he studied under Benjamin Graham, a renowned economist and investor who would have a profound impact on his career. Graham's philosophy of value investing, buying undervalued stocks and holding them for the long term, resonated deeply with Buffett. 8. Launching Buffett Partnership Limited. After working for Benjamin Graham for a few years, Warren Buffett decided to start his own investment partnership. In 1956, he founded Buffett Partnership Limited with just $100 to his name. This was the beginning of Buffett's real journey into the world of high-level investing. This strategy paid off immensely, and by the time he closed his partnership in 1969, Buffett had grown his investors' money by an incredible 29% annually, far outperforming the market. 7. The acquisition of Berkshire Hathaway. In 1965, Buffett took a significant step in his career by acquiring a textile company called Berkshire Hathaway. At the time, Berkshire Hathaway was struggling financially. However, Buffett saw an opportunity to buy the company at a low price, believing that its assets were worth far more than what the market was valuing it at. He eventually took control of the company, and over time, he shifted its focus from textiles to investing in other businesses. Berkshire Hathaway would become the holding company through which Buffett made some of his most successful investments, turning it into one of the largest and most successful companies in the world. 6. The power of long-term investing. One of Warren Buffett's core philosophies is the importance of long-term investing. While many investors focus on short-term gains, Buffett has always believed in the power of holding on to investments for the long haul. He often says, "Our favorite holding period is forever." This strategy has served him well, as many of his investments, such as Coca-Cola, American Express, and Geico, have increased in value over decades. By focusing on businesses with strong growth potential and solid management, Buffett has been able to generate incredible returns by holding on to them for the long term. He also avoids selling businesses based on short-term market fluctuations, a strategy that has earned him the admiration of both individual and institutional investors alike. 5. The importance of a strong management team. Buffett is known for his hands-off approach to managing businesses. He doesn't micromanage the companies he invests in. Instead, he focuses on hiring strong management teams and allowing them to run the business as they see fit. This is one of the key reasons why Buffett's investments have been so successful. He trusts the leaders of the companies he invests in and believes that a strong, capable management team is one of the most important factors in a company's long-term success. Buffett once said, "In looking for people to hire, you look for three qualities: integrity, intelligence, and energy. And if they don't have the first one, the other two will kill you." 4. The importance of staying within your circle of competence. Warren Buffett is also known for sticking to what he knows. He's built his wealth by investing in companies and industries he understands well, and he's often said that investors should only invest in areas they're familiar with. This concept is known as staying within your circle of competence. Buffett doesn't invest in technology or industries he doesn't understand, which is why he's avoided investing heavily in areas like tech stocks for much of his career. By staying in his circle of competence, Buffett has been able to make more informed and confident decisions that have led to long-term success. 3. The influence of Charlie Munger. While Warren Buffett is the face of Berkshire Hathaway, he has always had a strong partner in Charlie Munger. Munger, who serves as vice chairman of Berkshire Hathaway, has been Buffett's longtime business partner and friend. Their partnership has been key to Berkshire's success. Munger has a more philosophical approach to investing, often encouraging Buffett to think outside of the box and consider unconventional ideas. Together, they make an incredibly strong team. Munger has often challenged Buffett's thinking, and this dynamic has played a big role in shaping the way they approach investments. The two have a deep respect for each other and share a common vision for the future of Berkshire Hathaway. 2. The concept of economic moats. Warren Buffett often talks about the concept of an economic moat when evaluating potential investments. This refers to a company's ability to maintain a competitive advantage over time. Companies with strong economic moats have something that protects them from competition, whether it's a strong brand, unique products, or economies of scale. Buffett has always favored businesses with wide economic moats, believing that these companies are more likely to thrive over the long term. Some of his most successful investments, such as Coca-Cola and Gillette, have strong economic moats that help them maintain a dominant position in their respective industries. 1. Giving back, the philanthropic side of Buffett. While Warren Buffett is known for his wealth and business success, he is also deeply committed to giving back. In 2006, he announced that he would be giving away the majority of his fortune to charity, primarily through the Bill and Melinda Gates Foundation. To date, Buffett has donated billions of dollars to charitable causes, making him one of the world's most generous philanthropists. His commitment to philanthropy reflects his belief in using wealth to make a positive impact on society. Buffett has often said that he's not interested in being the richest man in the graveyard, and he hopes to use his fortune to help others long after he's gone. Warren Buffett's path to wealth is a story of patience, intelligence, and strategic thinking. From his early beginnings as a young boy fascinated by numbers to becoming one of the most successful investors of all time, Buffett has built an empire based on sound investment principles and a commitment to long-term success. His journey offers valuable lessons for anyone looking to invest wisely and build wealth over time. His focus on strong management, sticking to what he knows, and his belief in economic moats are just a few of the principles that have guided him along the way. Bonus tip: the key to Buffett's success is his ability to look beyond short-term market fluctuations and focus on the long-term potential of his investments. Whether you're just starting out or an experienced investor, remember that the best opportunities are often those that require patience and a long-term perspective. Invest in businesses you understand and believe in, and don't be afraid to hold on to them for the long haul. If you enjoyed this video, don't forget to like, share and subscribe for more insights on investing and personal finance. Let us know in the comments what you think Warren Buffett's next big move will be, and thanks for watching.